If you bought gold near the top, or you loaded up on silver thinking the breakout was finally here, I'm not going to lie to you. You're probably down hard right now. And the worst part isn't even the money. It's that sick feeling when you open your portfolio and see red everywhere and your mind starts spiraling. What if I was wrong? Because right now the internet is doing what it always does during a crash. Headlines are screaming, comment sections are laughing, and every so-called expert is telling you the same thing. Sell before it gets worse. But if you listen to them, you might be making the most expensive decision of your life. Because this is the exact moment the market is designed to shake weak hands out. The people who panic sell here don't just lose money, they transfer wealth. So today I'm breaking down what's really happening in gold and silver, what the data is showing, and why this crash might not be the end, but the setup for the next violent move higher. Let me be clear. Nobody knows exactly where gold and silver go next. Anyone pretending they do is lying to you. I don't know. You don't know. They don't know. But what we can do is look at the facts and make decisions based on logic instead of emotion. That's all this video is. Context. No hype, no blind optimism, just real data so you can think clearly while everyone else is panicking. This wasn't some normal pullback. This was violent. Gold dropped fast, and silver got crushed. And the second the market turned red, the narrative flipped instantly. The same people who were calling gold unstoppable are now saying it was a bubble. The same people who were celebrating silver are now acting like the entire trade is dead. And that's how it always goes. When markets rise, they encourage you to buy. When markets crash, they shame you for owning it. That emotional cycle traps investors over and over again. If you've been around long enough, you've seen this before. In 2008, gold crashed hard, and everyone said it was finished. People sold near the bottom, and then gold exploded higher in the years that followed. The same thing happened in 2020, when silver collapsed during COVID panic. People dumped it, and not long after, silver ripped upward. So now here we are again. Gold down hard, silver down even harder, and the same voices screaming, "Sell!" Maybe this time is different. Maybe it falls more. I'm not ruling that out. But last time the world looked like this. Selling wasn't the smart move. Selling was the trap. Here's what most people don't understand. Everyone is watching gold and silver right now, but the real warning sign is the US stock market. There's a valuation metric called the Shiller PE ratio, and it measures how expensive stocks are compared to earnings. Right now, it's sitting at levels only seen a few times in modern history. 1929 before the Great Depression, and 2000 before the dot-com crash. That should scare you, because when stocks are priced for perfection, all it takes is one crack and the system starts to unwind. And historically, when that happens, money doesn't rush into tech, it rushes into gold. Now here's another signal people should be paying attention to. Reuters recently reported that Chinese regulators are pushing banks to reduce their holdings of US government bonds. Let that sink in. The second largest economy on Earth is questioning whether US debt is still trustworthy. That's not conspiracy. That's real. And when a country like China starts stepping away from treasuries, the question becomes, where does that money go? Historically, it goes into gold. And while retail investors are panicking, China is accumulating. Most people look at gold priced in dollars, but flip it and look at the dollar priced in gold. Ask yourself, how much gold does $1 buy over time? Over the last 50 years, the dollar has been crushed against gold. It doesn't happen overnight, but it happens consistently. The dollar rallies, gold dips. People think the trend is reversing, and then the dollar fades again and gold rips higher. It's been the same cycle for decades. That's why every time gold drops, people think the bull market is over. But zoom out, and it's just another step in the long-term decline. And here's what most people are missing. Everyone is focused on how far gold fell, but the more important detail is how fast it bounced. Gold hit a low and snapped back quickly. That doesn't happen because retail suddenly got brave. That kind of bounce happens when serious money is waiting underneath the market. Central banks, institutions, sovereign buyers, the people who don't panic. They care about positioning, and the speed of that bounce tells you there is real support under this market. Silver is a different beast. Silver doesn't correct politely. It collapses like an elevator.